Yo, what is going on YouTube? Thomas here from VAGAFX. Today we are going to be covering over the pounds-dollar trade that was taken yesterday. We did call this one out in the community. We also called another cable trade yesterday which has been tagged today. We will be covering that one on the weekend with some additional learning. So without any further ado, let's get straight into the video. So I'm just going to briefly show you my markups on GBP USD, guys. We've got the trade that was taken on Wednesday. I did call this one out in the community. I should post it on screen right about now. And we've got the trade taken today. I don't know if this is going to come in, guys. I will quickly show you my profits on screen for this. We are going to try and ride this one out into the Asian liquidity up here, into this supply zone that was formed. We're going to go on to the hourly. We're going to actually change the layouts there and get a blank chart up, guys. I'm going to go over my thought processes for the trades taken Wednesday morning. So we're going to start off by looking for hourly fresh imbalances, guys. Tell you what, we'll go on to the daily first. So the reason why we come onto the daily, guys, is simply because we can look at fresh imbalance. We can get an idea of where the market is likely heading. Then we do have a demand zone formed by here, and I will draw that. But in my strategy, we do go with whatever imbalance was formed last, or whatever fresh imbalance was formed last, as we have had a fresh supply zone formed by here with this large imbalance down move. We are going to be looking at short opportunities. We're going to go to the hourly now, guys. We're going to start marking out zones in the same way. We've got a zone here. We can see you've got this down move, fresh imbalance candle. The imbalance indicator makes it nice and easy for us. We can see that the market's come down, it's come up, rejected. You can obviously look for counter momentum opportunities, guys, so there would have certainly been a trade that we could have looked for by here, but it is counter momentum, at least against our bias. And even though when you do filter trades out using higher time frames, you are going to miss some winners, but it does increase your strike rate overall. That's why we do it. We can see another one by here. We're going to mark it to the extreme. See the markets come out nicely, and we've got another one here, guys. So we can clearly see that during this distribution, you could actually call this a Wyckoff schematic. But without Wyckoff, we can see that the market is clearly rejecting these fresh zones that have formed. I'm going to come back now to the 15-minute time frame. This is what I currently use for entries. I do have some traders that tuck this on the 5-minute time frame. I know many of my older students do still trade V swings and X swings on the 5 minutes. We have over the last year adopted 15 minutes as our most dominant time frame. And that's simply because the imbalance tends to get mitigated a lot more. So I was waking up around Frankfurt Open by here. We can see that there was this imbalance formed by here. You could have already had this zone marked. In fact, many of my traders did actually trade from this zone. I personally didn't, just because it was around 5:30 that this zone had formed. You do have above average volume, so it's certainly valid, but I had stopped looking at the chart at this point the day prior. I didn't actually get involved. But you'll see now that the market does spike into this. I don't actually know if there was a news event or something. It might have just been the volume that was coming in at Frankfurt that caused this large spike. You can actually see that the market's come in to the supply zone that we had marked on the hourly chart. And this is actually a zone that had formed just after market rollover. And it's cool to see, just because you know that there's going to be little to no volume. You remove the moving average there at market rollover. You can see that when the orders start picking up, this is where the market is spiked into. But this would be a zone I'd be looking to ignore anyway, simply because it's below average. We come back to the 15-minute chart. We start getting rejection candles, and once this candle closes, not too sure why, the indicator would mark this blue. I think it might be because we're on replay mode at the moment. Let me just change that. There we go. So we got this fresh and balanced candle by here, guys. Now this is at Frankfurt Open. We've got above average volume. So this is certainly a trade that I'm going to be looking to get involved. It's in line with what the higher time frames are doing. We're rejecting off an hourly supply zone. We've swept all of this liquidity here. Well, we haven't swept, we've taken it for now. And we're rejecting off a previous higher than average volume supply zone from the day before. Now what we're going to do, guys, is also look at liquidity for the market's target. We're also going to draw swing structure. Now we still do this on the 5-minute time frame for those of my older students that think, what the hell is he doing? Why is he going against his old strategy? I still do look at swings, and I do this on a regular basis. In fact, that we do have an indicator that does this automatically now, so we don't actually have to mark this up. Personally, I still do it manually. We can see that the market has broken up. It's reverted back under this swing low. So we are going to be looking at a bearish setup. Wouldn't be valid as an X-swing setup for those looking at my legacy setups, guys, but this is a valid scourge setup that we do take. So what I'm going to do, guys, so we'll pull that across by here. Going to mark our new zone. You can either have your zone drawn to here, you can draw it to the extreme, guys, just to give you a bit more protection on your stop loss. You can even have your stop loss behind this supply zone for extra protection. And we can place our trade. Now, as this is counter swing, guys, it would be up to you if you did want to target the swing low or not. You are trading in line with what the higher time frames are doing. Personally, I was happy with a generous 5R just below the liquidity that was printed below Asian session. I do target 5R on the majority of my trades. I do this just because during my backtesting samples, I have got a large amount of data that tells me that 5R is a very likely rewards that occurs on most trades. In fact, it does tell me that my ideal RR per trade is 9R if I were to target that, but I would prefer to have less drawdowns, so I do still go for 5R in total. If we play, we can see that the market does come back multiple times. It does even give you options for re-entry, so if you did have another supply zone formed by here, market does actually come back. And I know my students did get, well, some of my students got involved on a re-tag by here. You see that it builds some liquidity and the market does continue moving lower. So let's now take a look at the trade that was taken today, guys, and we'll go through our thought process on it briefly. I will cover this again on the weekend. Now let's look at the zone to start off with. We can see that this zone, this swing low, was formed at a high average volume time period during the European session. So we know for a high certainty, guys, that there is going to be orders within this zone to reject the market at a later date. Now we're also in a bullish swing. How do we know this? If we come to the 5-minute time frame where we draw our swings, if you are unsure about how we draw our swings, you can go through my previous videos. I know many of my older students will know how to do this very easily. We can see that we had this swing high that was formed during London Open the day prior. We also had this liquidity that was built above the Asian range. So even before this bullish swing had been produced, I was already looking for a trade from this region. If we come to the daily and we draw our zone like we did earlier, we can see that the market is actually rejecting this daily scourge demand zone. We know this because we do have a fresh imbalanced candle by here. We come on to the hourly. We can see that the market has produced hourly fresh imbalance, further to confirming us that there is a large movement about to take place from this region. We go back to the 15-minute time frame. We've got our fresh imbalance formed by here. We did have some liquidity by here. Other traders will call this inducement. We just know that it's liquidity for the market to sweep into. We know that the swing high is likely going to get targeted with this. I'm going to settle for a comfortable 5R on this trade if we do hit the Asian liquidity. You can actually see, guys, that there is fresh and balanced performance by here. Now, I have got this zone marked by here. And this is just because we would have looked for a re-entry if you didn't actually get involved on this initial one. I had my order set already for this zone, but for many of my students that didn't get involved, they were able to get involved once we saw this fresh and balanced candle by here. You'll notice, guys, and you may notice a lot in my analysis that we don't give a damn about structure breaks. So you can see that there was no structure break here, and we like to get involved from this region. And that is because, unlike other S&C traders or supply and demand traders or even ICT traders, we know as a community that imbalance is the cause, structure is the result, and not the other way around. Structure is used for confirmations, but it's actually imbalance that is causing these movements that break structure. So we actually look to get involved from imbalance, and we hold imbalance over structure, which is why you'll see me taking trades with no structure breaks often. And I think it is what sets us aside from other traders a great deal. Sorry guys, just a quick update as I'm finishing this video. We have just come into the Asian, the peak of the Asian range. We are starting to come into liquidity. I'm actually closing this trade out early. My actual target on my MT4 with 5R is actually up here somewhere. Closing this down as it's a Friday, but I just wanted to notify you, here is my trade on screen. Just close that out now. And for all of you watching that think that I might be making this up, guys, here are some of my students' profits. So we've got GU, GU. We've got people getting out of drawdown, ready for their next payout. Try and ignore what that says. So just to let you know, guys, I'm not the only ones profiting from these trades. I do call these trades out. My team do get involved with these with me.